Good morning and welcome everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, after the Monday mayhem, it seems we are in for a turnaround Tuesday, right, Santo?
Well, CJ, just remember, markets don't fall in a straight line.
Yeah.
Okay. So what you could be probably looking at is a relief rally, and also remember, bears also need some rest, right? They've been very active over the last 4 sessions.
Well, I hope they keep resting forever. That said, let's take a status check on how the market indication is. SGX Nifty 50 futures, the Nifty 50 futures that are traded on the Singapore exchange are finally indicating a positive start for Dalal Street, right? They're up about 60 odd points as we speak. US markets, however, they started off on a strong note on Monday, but by the end of the session, they ended up losing all of those gains and ended quite lower. And but Asian markets, our good old friend Asian markets, they are doing quite well in the session as we speak. There positivity all around from Singapore, China, Japan. We are seeing green tick coming from everywhere around Asia. So things are looking up.
So probably some of that could rub on to India as well today.
It is going to rub off. I'm pretty sure of that.
Well, CJ, I just wanted to ask, did you check out this update put by Angel One?
Yeah.
Okay.
Yeah.
So if you look at the numbers closely, it seems to indicate that new investor, the so-called new school investors, seem to be running out of a little bit of steam. You know, there's been a drop in the number of active investors.
Well, they have been the atlas of your market for so long. I mean, what do you want them to do? Always keep on heavy lifting? Of course, they need some rest. Sometimes they also need some rest. But do not take that as a sign that, they are going to run away from this market. They are in it for good. And you're not getting rid of them, Santo. Believe me, you're not getting rid of them.
Well, I think caution once in a while is not such a bad thing after all. I think finally they are also learning some of the ways of the old school.
Well, they are learning the ways of the old school and they are bringing the ways of the new school, and they are making a great amount of money in this market. So yeah, they are in good stead. I will not worry about them.
Well, so moving on, I think, CJ, now what we are looking at is some kind of a two-tier market where you have one tier where the FIs are just selling stocks left, right and center. They sold close to about 6,000 crore worth of shares yesterday also. But on the other side, interestingly, you're seeing a fair bit of activity from HNIs and mostly in mid and small cap stocks. Now, what seems to be happening is what one of my good old friends in the market said as revenge of the old economy.
Revenge of the old economy.
Old economy stocks which had been ignored so far, suddenly they are in demand, and what you are seeing is that HNIs are mostly moving into those stocks where you have minimum institutional presence, which are.
I'm actually not surprised by that fact. You know why? Because about 6 to 7 months ago, if you were speaking to a lot of these wealth managers who basically, are big advisories for HNIs and all, they were of the opinion that among the class of investors who had missed out on that bull run of 2020, 2021 were actually HNIs. They were the one who were actually always, being very cautious, sitting on the fences, thinking that probably there is a big fall coming, there's a big fall coming, and that fall never came.
Good reason, CJ, there's also something called as conservation of wealth, right? It's not always.
See, you have to look at your trade-off here. You keep on conserving your wealth while your neighbor Jones is, making doubling or tripling his wealth. So yeah, there is sometimes envy that comes in, and I'm not surprised that HNIs are coming back into this market and buying all the dips, because they have missed out on. This is the correction that they were waiting for. This is the opportunity that they were waiting for.
So I think it does make it easier for them to, control a particular stock if they know that there's no FPI selling going to come in there. And that is what we are seeing across sector. There's a lot of rotation happening right now, money rapidly moving from one sector to the other, but most of them are sectors which are not really on the institutional radar.
Interesting bit, Santo, just to add to your point, yesterday I was speaking to this fund manager, and he's a veteran guy, just like your old friends in the market. He's a veteran, asset manager in the market, and his view was that for the next 6 to 7 months, just don't look at anything, because all of that sector rotation that we were seeing in 2020-21 has also exhausted. So now, just focus on commodity plays, metal plays, your companies that are linked to the domestic economy. they will probably be in the limelight for the next 6 to 7 months. And I'm not surprised that HNIs are actually targeting those sort of stocks.
So the sectors which have been in limelight over the last few weeks, the money has been rapidly moving out of textiles, and fertilizers have been in focus. Suddenly paper stocks are seem to be the flavor of the season.
Paper stocks remind me of a good joke, what is the best, sector to invest in a market?
Well, I don't know.
Paper stocks.
Why so?
Because paper is stationary.
Oh, man, I think every time I hear a sad joke and think that this is the worst, probably you kind of, outdo yourself.
You laughed at that. Internally, you are laughing with joy, please.
Okay, well, this is no longer a stationary market. If you look at the mid caps and small caps, that's where I think a lot of action is happening right now.
So basically, to summarize it all, it seems that what Santo here is indicating is that the mid and small cap space is maybe going to outperform or continue to outperform the large cap space. Given that not only HNIs but even retail investors are pretty much fancying the mid and small cap space, because that is where the upside probably is. That said, now that the macro bit is done, what do we have on stocks today, Santo?
Well,
I'm really waiting for this one.
Okay, so we've talked about this one yesterday also, but I think it still makes sense looking at Infosys, where the fourth quarter numbers were way short of expectations, and also the guidance provided by the company was no great shakes either. So the number of bearish bets on Infosys, that seems to have now increased if you look at the activity in the F&O market. So a lot of put options being bought at the 1600 price.
And you buy put options basically when you have when you're expecting the stock to fall, basically.
Exactly.
Right?
So well, again, it depends on who do you think is the smart money out there, and which is usually the option writers, which are considered to be the smart money. So 1600, lot of put writing at 1600 probably also means that maybe that's some kind of a bottom for the stock. But this is clearly a stock to watch for, because this also sets the tone for other stocks in the IT sector, where I think sentiment seems to have.
I mean, yesterday Infosys earnings took the entire IT pack downwards. I mean, the Nifty IT index fell what, 3 or 4%, if not more.
Yes.
So yeah, that is one stock.
We'll
to
continue
watch out for.
on the IT sector itself. Mindtree is the other stock to keep an eye out for. Company reported fourth quarter earnings yesterday. Numbers again just about in line with what market was expecting. 5% sequential growth in revenues. That was what most analysts were expecting. But here again, while the numbers are good, I think clearly there's a shift in outlook as far as the tech sector is concerned, because most of the research notes that we have read about Mindtree show that analysts are pretty cautious on the stock.
That's a big statement.
Yes, and despite all that talk about robust demand pipeline and everything, which I think that was the point you were trying to make. Most analysts have retained their.
You are not buying that argument, are you?
No, I'm not buying that argument because, as I say, yesterday's facts makes yesterday's prices, and today's facts make today's prices. And the outlook has clearly changed for the IT sector. Most analysts are cautious on Mindtree. Tata Power, yes, this is again a stock, we discussed it yesterday, but it will remain in the limelight for the next few days. CG, I think, there's too much excitement build up over Tata Power over the last couple of weeks. We saw very swift run up. You've been also talking about that stock. Now, the much awaited news has finally come through, but despite that, most analysts, I think I didn't read a single buy recommendation on this particular stock.
Yeah, that is true. I mean, so the argument seems to be that probably too much has been priced in. That means a lot of the positives around, or a lot of the brouhaha around the stock is now in the price, and therefore there's no upside left. But I mean, the only thing that I will add here is quoting institutional equities. Even though it accepted this argument, it also said that, see, you have to now shift attention to what is happening on the coal margin side, or the the traditional power plant business of Tata Power. And there you have to remember that imported coal prices are rising, right? And because they are rising, and given that this government has shown indication that it does not want to go to the populist route, it will continue. It will probably revise tariffs if cost for power generators is going to rise. So that should possibly be beneficial for the margins of Tata Power.
That's an interesting argument that you've made there, CJ. But in the short term, I think too many people have piled on to the story. And while I take that point about somewhere the coal prices being regulated to an extent, I think in the interim probably you could see a lot of people trying to jump out of that stock because there are no fresh triggers right now.
Right.
AU Small Finance Bank, this company will be considering a bonus issue as well when its board meets, and that could trigger some amount of excitement in the stock. The stock already has seen a fair bit of run up over the past few days. The play here is that mainly, asset quality has been pretty good. It's a play on the recovery in the economy. Retail deposits constitute a very big bunch, a very solid bunch of its borrowed funds, and that is something which analysts are positive on the stock. This is among the highly rated stocks in the Money Control Pro list. This is a stock where you could see some action. Of course, the run-up has now has made the stock look a little expensive, but clearly, if the economic recovery theme plays out, then this is a stock that could.
What's your last stock then?
Last is PB Infotech, and you'll be surprised by that.
Policy Bazaar on
new
Santo's
age,
list.
new age business, as CG would like to call it. So ICICI Securities has initiated coverage on the stock with a buy rating, and what ICICI Securities has said that again it's a play on the fact that insurance is still a very underpenetrated market in India. Besides, PB Infotech has got a good strong brand recall and also a strong balance sheet. It's been spending quite a bit, but ICICI Securities feels that spending could come down in the days to come, the money that it's spending on promotion and other things, and that should kind of improve the bottom line.
Good to see you, good to see you bringing positive things in the limelight about your new age technology stocks. That said, my first company that I am going to look out for is ACC. So the company is going to report its Q4 earnings later today, so that will be the margins and the volumes that the company will report will be in focus. Also remember, the earnings are coming in the backdrop of news reports that its parent Wholesome is going to get out of its India business. So I will not be surprised that a lot of the questions to the management is around that news report. So that is something to be really watch out for. And lastly, it's the first cement earnings that are going to come out. So probably it will set the tone for other cement companies in the market, and we could see a rub-off effect on other cement players.
Some bit of price hikes in the cement sector.
Yeah, that is true. So price hikes we have seen, so that is possibly going to protect a lot of these companies' margins and all that. So
but then if demand doesn't pick up correspondingly, but I think the March quarter is a different story altogether.
Yeah, that is true. That is true. I mean, I think largely one can expect good margins and good volume performance from ACC. But that said, next up is Mishtan Foods and Salazar Techno. Okay, so Mishtan is going to do a bonus issue, if I'm not wrong, is going to do a bonus issue, and just like AU Small Finance Bank, it seems like the promoters basically want to reward the investors who have basically driven up the stock for the past 1.5 to 2 years. So a bonus issue is on offer on Mishtan Foods. Salazar Techno is going to join the stock split party on Dalal Street this month. Like almost every company is coming out with stock split, and Salazar Techno is no exception to that. So
that's a slightly dangerous sign, CJ. Let me tell you. When you see suddenly too many companies announcing bonus issues, coming out with stock split, which at the end of the day doesn't really make a difference to the investor.
It makes the stock price attractive for retail investors, and also it's a sign that corporates are also optimistic about where the market is.
Well, you just said it makes the stock look attractive. That's a new school investor speaking. Actually,
oh God, you and your condescending tone. Paytm, okay, so stock fell 4% on in trade on Monday, and we all know it's about down 70% from its IPO price, the 2150 IPO price that it came out in November. But interestingly, Citigroup's brokerage arm has come out with a buy rating on the stock and a price target of around 910 rupees. The brokerage believes that the stock is now quoting very attractive valuations, and all of the negatives around the company that that have been in the news over the past 6 to 5 months, all of that is now priced in. So possibly,
well, when the stock fell 50% also, many people thought now it's looking pretty attractive. That's the difference, between value and price, CJ.
Yeah, that is true. But now Citi is making an argument that probably the value also, the multiples have contracted of the stock. The price to earnings multiple, the price to book multiple, they have all contracted. Plus the management also finally given a roadmap on when it expects to achieve profitability. So that is something to really look out for. Lastly, Indiabulls Housing Finance. So Indiabulls had issued FCCBs, which are known as foreign currency convertible bonds, to a lot of its bondholders. Some of those bondholders now want to convert those bonds into equity shares, they are going to convert it in, $10 million worth of bond into 3 million equity shares, and the conversion is going to happen at a 50% premium. So that is something to really look out for.
I'll take you on that in a little bit. The market has opened in the meantime. Nifty is up about 72 points in early trades, 72,200.
As indicated.
You have got your relief rally there. So don't celebrate yet. We still have got about a good 5 hours.
I'm pretty sure it's going to sustain.
Mid cap is in the limelight again. Nifty mid cap is up by close to about 1%. Small cap also up by about 1%. So on the whole, I think it's upbeat mood at the start of the day.
I think it's the banking index that is probably leading the gains. The Nifty Bank is up about 0.5%. If you look at the advanced declines on the BSE, almost 3 stocks are rising for every one stock that is falling. So that is pretty healthy. It seems that the gains are very broad based. And if you look at NSE, almost 1,700 stocks are higher and about 250 stocks are lower. So yeah, very good market breadth.
Yes. So you're talking about Indiabulls. Well, the point is that you mentioned about that conversion price.
Yeah.
I'm a bit suspicious. Why would you want to convert?
You're a bit suspicious. When are you a bit suspicious? You're always full suspicious. You're never a bit suspicious.
No, but for good reason also. I've seen many more moons in the market than you have. Why would you want to buy something at 243 when you're finding it at at a much cheaper price?
Maybe they feel that there is even further upside from 243. And also sometimes so remember, these are all foreign investors who are holding these bonds. Sometimes when they enter the market and try to buy it from the open market, they may not get the required quantity or the required, the size that they want. And through a direct conversion of bonds into equities, they can at least ensure that they can get the good amount of, or the amount of shares that they want to own.
That is what they would like you to believe, but anyway, I'll take your point.
Yeah, thank you. Thank you so much for taking my point, finally.
Welcome.
That said, our last segment of the day, आज अंदर की खबर क्या है?
So, CJ, pretty interesting. One of the themes in the market over the last few months almost now has been the emergence of the HNIs. They've come into their own, and the talk in the market is that now they're almost as powerful as some of the local mutual funds. They're closing very large deals.
Really?
In fact, yeah. So yesterday in Sunteck Realty, there was a huge block of shares that changed hands. Close to the counter saw trading volume of close to about 2 million shares on the NSE. Now, chatter in the market is that there was a fund house which was trying to sell it, and it really struggled to get a good price for it. Ultimately, it was picked up by HNI or a clutch of HNI. Is still not clear because it was not reported on the block deal or bulk deal.
So why was it not reported? Usually, I would assume that both sellers and buyers should be reported as the block.
Yes, it could have been probably done in tranches. So when it's done in tranches, typically it flies below the radar. Usually, in the case whenever HNIs buy, you see that very rarely do you get the identity of the buyer. So about 2 million shares traded. The block changed hands at about 464 rupees, and after that, it just shot up all the way to 482 before closing.
Yeah, I'll be interested to know the names of the HNIs, because it seems like some big wigs have come
They're
into
running
that.
right now. HNIs, they despite all the selling that is happening in frontline shares, I think the mid and the small cap segment seems to be a parallel universe altogether. TVS Suzuki is the other stock which witnessed
TVS Motor, you mean?
Sorry, TVS Motors. That's really going back old school. TVS Motor.
HNIs are getting into your head, I'm telling you.
So, TVS Motor, that's a stock which saw a huge
another bulk deal, right?
Yes, about 32 lakh share changing hands. Now you have the seller, the identity, which is Jalamukhi Investment Managers, but again no sign of the buyers. So now a big block of 32 lakh shares just can't be done without a negotiated deal. Again, it may most likely have been bought in tranches by HNIs who didn't want to be want their identity
because they possibly don't want people to free ride.
Exactly.
That is what happens.
So this is the second major deal in the TVS Motor counter over the last couple of months.
I think something happened 2 months ago as
in
well.
February, Sundaram Clayton had sold about 95 lakh shares. That was also picked up. Again, no clue about the buyers. So it's very interesting how any big block of shares that come up for sale are being quietly mopped up. Big jump in the stock price over the last 1 month, more than 20% rise. This has been among the better performing two-wheeler stocks, despite the overall negative outlook on the two-wheeler segment.
I'm not surprised that actually HNIs are, as you indicate, that HNIs are possibly accumulating shares on TVS Motors, because I mean it's now seen as almost as a proxy play to the entire electric vehicle story. Among the listed universe, it's probably one of the few companies which actually has a visible pathway into the electric vehicle future compared to its other probably bigger peers like Bajaj Auto and Hero MotoCorp?
I take the point on the EV play, but what is happening is also that market right now is excited about anything where, you mentioned green, electric, renewables, they just come and lap it up. See, the company is trying to raise money in its EV subsidiary. Let's get there. Just hang on there.
This is a stock market, not Google that keyword search करके जो stock आया बस खरीद लिया. इतना undermine करने की जरूरत नहीं है, ठीक है? Anyway, that said, this is a wrap from our end. We will let you get back to your trading and your day's activity. We'll catch you live at 3 p.m. when we wind up the entire day's action and talk about some other stocks that have been, catching our eyes.
Well, thank you for watching Markets with Santo and CJ, and we'll be back with you at 3 p.m. So have a good day ahead.
Yeah, and please post your feedback on the comment section below and follow us on the links on the bottom of your screen. Take care and have a great day ahead. Thank you. Thank you.